Hello, I'm Michael Hainsworth. Canada's pension fund model is recognized worldwide for its role in the country's social security framework. So why mess with a good thing? Over the course of the last year, we've seen increasing calls to use pension funds as a policy tool. And with Donald Trump's tariff war, the calls to invest more domestically may grow. Meet Claude Lamoureux, the former head of the Ontario Teachers' Pension Plan. He received the Order of Canada at the height of the financial crisis of 2008. He's also a co-founder of the Canadian Coalition for Good Governance.
Pension funds will find opportunities. I don't think that they need somebody in the government to tell them invest here and invest there.
He joins us now. Thank you for joining us.
My pleasure.
As Donald Trump starts his trade wars, stops his trade wars, starts his trade wars again, is there a lesson to be learned from the 2008 financial crisis that can be applied today? Or do we have to go all the way back to 1929 and the start of the Great Depression?
Well, Mr. Trump is very unique. I'm not sure that we can necessarily learn from the history or even 2008. You know, one of the things that he does very well is that he keeps changing his mind. And as we've seen over the last month, he comes up with policies and then he can change, overnight as he's done recently. So we're pretty much on our own to work through this problem. But, when I look at Mr. Trump, I'm not sure. I don't think that he will be there after, he'll be president, but probably his policies will be tougher to implement when we get to 2026, because what my expectation is that Congress will change. So we have to rely more on history and having somebody who is predictable in the chair of President of the United States.
History has showed us, though, that companies do not like uncertainty. And you've been on the board of directors for several Canadian companies. How do you see them reacting to the tariffs?
It's very hard to react to some of the changes that Mr. Trump is doing. So you have to be careful. You have to be careful and not to overreact. And I think not many companies have a reserve that they can use to essentially survive during this period. So the government will probably have to help them, and maybe some of the pension fund will have to help them because we're in for a tougher time, and it's hard for us. Although we can say we got to diversify long term. Our natural market is much more the U.S. and even Mexico than Europe or Asia. I think it would be good to have a more diversified set of clients. But this is, in my mind, a unique circumstance, and we got to live through it.
When you say that the pension funds may have to help, in what way would you suggest that? Because as I say, if there are calls coming from Ottawa and elsewhere to leverage the powder that's dry sitting on the sidelines by the pension funds to help Canadian companies, is that how does that play out? And is that something that you think is an effective way of addressing Trump?
Well, if a company has trouble, maybe it's like your banker. You got to go and sit down with your banker. You have to go and sit down with a pension fund and say, look, I need some help. Here's my strategy. And maybe pension funds can buy bonds, not just stocks necessarily, can buy bonds. I think in our case, when I was at Teachers, we've made investment where we defer the payment of interest for quite a period of time on occasion, because it was, to our advantage to some extent, but also to the advantage of the company if they needed money and, liquidity. So pension fund could help in that sense. But it's the same thing when you deal with your bankers and even with your shareholders. You have to tell them that, this is a tough time. Here's what we got to live through. And, you have to, but having said this, pension funds, I think this request to invest outside of Canada started before Mr. Trump. And I think it's a misguided solution. pension funds invest their clients' money, and generally half of it comes from members of the pension plan, not just government. Which, the biggest pension fund in Canada are all pretty much government sponsored. And to me, the pressure was wrong. And in the case of, when you look at the world capitalization, 2/3 is in the U.S. or even more than that, mainly because of the technology the companies that exist in the U.S. that we don't have in Canada. And some of these companies have done very, very well. So I think that you got to let pension plan invest where they think it makes sense long term, because a pension plan doesn't invest for the next quarter. It invests for the next 40, 50, 60 years. In the case of the Canada Pension Plan, probably the outlook is 100 years. So you got to think long term, as opposed to just, here's a crisis and we got to solve it. But pension plan could be one of the actor that could be helpful.
Canadians are saying bye to America and bye Canada. So what is the impact if a pension fund does the same? Critics argue that we'd be putting too many eggs in the Canadian basket.
Well, one example I like to use when people, tell me that it's really the case that, if we invest too much in Canada, we put all our eggs in one basket. You look at Norway, which has a petroleum fund. When it was created, the one thing that the Norwegian did was they could invest anywhere in the world but in Norway. Why? They wanted to diversify their economy. And one way of diversifying their economy was not necessarily to invest more in the Norwegian company, but to invest outside. And I think that they've been very successful, and they've stayed the course. They've done that now for a number of years. They're the biggest fund in the world. And to me, if you look at the Canada Pension Plan, I think, and a lot of the Canadian pension funds, investing outside Canada was certainly a good idea. And, in the case of the Teachers Pension Fund, when we took it over, we had a deficit of $8 billion. And, we were able to get out of that by, essentially investing not just outside Canada, but investing in a way that produce good return. And, pension funds are fiduciary. They have to invest for the long term. And if you look at some of the at the Heritage Fund, there has been pressure in Alberta. There has been pressure to invest in Alberta. But their fund, once you have the pressure starts and you give in, there will be other problem other than Mr. Trump in 5 years or 10 years. And to me, the people who run pension fund and the board should look to make the best investment they can for their clients, because that money will be needed when these people retire. And with an aging population, the demographic doesn't work in our favor. So we have to think long term, and you have to let people invest where they think it's the best place to invest.
Trump is being accused of deliberately sabotaging asset prices to deflate them so that they're easy to buy on the cheap for his buddies. If the similar scenario breaks out in Canada as far as depressed asset values, is stake on sale? Does Canada buy Canada? Do pension funds turn to Canada and invest here specifically for that reason?
Well, obviously, if the price of some stocks come down, the Canadian Pension Fund will certainly look at it, because, again, most of these businesses will be there in 10, 20, 30 years. But if the price is low and it's very attractive, I don't think that Canadian pension fund or Canadian investor will need to be pushed to invest more in Canada. But it's an opportunity that presents itself. But I don't think that Canadian pension fund, we should not have a policy just reacting to Mr. Trump. As I said earlier, this will last maybe for another year and a half. My expectation is that Congress will change in 2026. So some of his policies will be tougher to implement at that point, and that's why he's in such a hurry. But you can see the pressure that he gets also from a lot of American companies and a lot of American voters to change some of the policies that are, in my view, misguided.
In 2024, Ottawa created the working group led by former Bank of Canada Governor Stephen Poloz to remove the 30% rule. Do you subscribe to the original intent that restricting pension plans from holding more than that protects assets and prevents fund managers from becoming business managers?
Well, don't forget we've had a policy like that before. When Ontario teachers started, pension fund could not invest more than 20% outside Canada. Then it got changed to 30%. I have to say that today with derivative, and that's one thing that we did at Teachers, we could swap the return from the Ontario debenture for the return of the S&P. And we were probably one of the first one to use that. And one of the things that our chairman, Mr. Jerry Bowie, at the time wanted to know, well, Claude, you got to go to the Department of Finance and really figure out, one, do they know what you're doing? And is it legal? And it was legal to do it at the time. So there are ways where you could be forced to invest in one place, but your return can come with somewhere else. And again, government could make rules that prevented you from doing that. But I'm against a lot of the rules that ask to invest more in Canada or to invest more in specific industry, because the fiduciary of these funds have to do what is best for their member, not necessarily for politicians. And if you start that, it's something that it could last for a long time. As the rule of 20 and 30%, they existed before, and I don't think that we should go back to that.
What's your assessment of the work Poloz is doing on proposed regulations to increase public transparency of pension investments?
There's total transparency. You just have to read the annual report. I mean, if you look at, a pension fund like Teachers, all of these things where we invest, not necessarily all the companies, but they're all listed. The Caisse de dépôt publish all of the investments that they do. It's a book about this thick, So in my mind, the annual report of every pension plan, all the major pension plans are very transparent. I mean, there's nothing hidden. You just have to read it. And, one of the things that maybe they can ask is to make it very specific. But I think that most of these plans, you can get how much is invested outside of Canada if you read the annual report.
When you look at the world of investments today, from your perch as a man who doesn't have to deal with it on a day-to-day basis anymore, but I'm sure you still do, where are you seeing opportunity worldwide?
The same question you could have asked in 1990. Where are the opportunities? We got a real estate crisis in 91. Many pension funds got out totally of investing in real estate. Teachers brought Cadillac Fairview that used to be owned by 40 pension funds. So opportunities are always there. It's a matter of finding them. There's fantastic opportunities today that AI will create, with artificial intelligence. And, pension fund should look at that. Investment in healthcare. I think that if you look at the healthcare sector, it represents a large percentage of the GDP of most countries. There are opportunities there. I think that in Canada, the government certainly won't let pension funds own hospital, but maybe that's a mistake. Maybe pension funds should own hospital and run them like a corporations. I think in the case of teachers, I used to tell people what we're trying to do is to run it like a corporation. But there are opportunities around the world. And, yes, at the time, when you're investing, you always think that things are different than before. It was easy before, yes, because you were not there. But if you were there, I can tell you that we went through the crisis you mentioned before, 2008. In 2000, there was a crisis of, technological companies became unpopular. Again, that's another crisis. And, when you're in it, you think it's going to last for a long time, but it never does. It's a matter of having a policy and making sure you invest. I think there were a lot of opportunities in China, but unfortunately, the Chinese government got involved, and today it's going to be tougher for them to attract a lot of pension funds and large investors because of what they've done. I think if governments are not careful, that's what happened. I mean, investors don't like uncertainty, and they like to see a government that looks at the long term and have policies that will last the long term.
The policies of the Trump administration, do you find that they are more or less favorable to investment coming from outside of the country? The America First thing is rubbing some people the wrong way, but not everyone.
Well, it could help U.S. corporations. Don't forget, the S&P 500, most of these companies sell something like 40% of their product outside the U.S. So you got to be careful to think that everything has to be done within the United States. Eventually, if this crisis continues and we go back to some of the policies we've had before, where every country wants to have all the productivity in its own country, the current or the world economy we had until recently was favorable to exchange, between countries. If Canada produces something more efficiently than the U.S., well, it's probably better to locate in Canada. If you have electricity that is cheap in Canada, you can produce aluminum that is much cheaper than you could do it in the U.S. Canada is lucky. We have a lot of water. We have a lot of things that we can use to produce electricity. The next crisis could be water for productions of food. And again, countries have to help each other. And why is the U.S. interested in quote buying Greenland, which I don't think will ever happen? So countries working together can make a better world economy. And I think that Mr. Trump right now wants to be an exception, and he wants everything to be done in the U.S. But if you look at the U.S., he's talking with both sides of his mouth. You can bring work into the U.S., but if you don't have the manpower, a lot of, I'm presently in the U.S., and I can tell you that the economy where I am depends a lot on people, the immigrants that work, that do a lot of the work that Americans don't want to do. And so Mr. Trump, yes, he wants to bring back work in the U.S., but the workers are not there. Right now, the unemployment rate is very low in the U.S., same as in most countries. So with demography, we have to be careful. We need the workers, and we need to treat them well. You need good teachers. You need, all these people. And countries working together can do much better than trying to be separate.
So to wrap up our conversation and our time together today, Claude, what is your advice to governments, provincial, federal, looking to public pension funds as a policy tool during the economic fallout of Trump's trade tantrum?
I think that pension funds will find opportunities. I don't think that they need somebody in the government to tell them invest here and invest there. The Canadian pension funds have been very imaginative, and around the world, they're seen as the most imaginative investors that you can get. And I would rely on them to find the opportunities and to react properly. And if there are opportunities, better opportunities in Canada, you will see the pension fund being there. There is no problem. In fact, government should open more opportunities for these pension funds. Have them own some of the roads. Have them own some of the bridges that we need. Most of the cities right now needs to upgrade their sewer system, their water distribution system. None of them, or at least are owned by pension fund in Canada, but we own these investments outside of Canada. Why? I think that, clearly this costs money. That means that the clients of these public utilities will have to pay. Somebody will have to pay for the upgrade to these public utilities. But there are opportunities that can be created in Canada that will attract pension funds. So it's a matter of being open to that. And so far, if you look at I remember when the 407 was finished, the Premier of Ontario at the time decided that, the investors were making too much money, and he says, I'm going to sue them. He wanted to change the deal. It's nice when somebody makes an investment. I know we did not invest at teachers in the 407 at the time, but my reaction was, the lawsuit is going to be on page 1 of all the major newspapers around the world, essentially saying, do not invest in Canada. But long term, this made sense. And I think that it's still owned privately, and the highway is very popular. And the big risk at the time, and this was probably, we were busy doing other things, but there was a big risk. You have two highways that are parallel, the 401 and the 407. Not many people were predicting the success that the 407 had. So it's a matter of repeating that and, inviting, making sure that pension fund can invest in Canada and creating opportunities. That would be my advice to government. If you need a new bridge, there's nothing wrong with having a toll on that bridge. But in Canada so far, we're hesitant to do that and to tell the Canadian citizen, this thing costs money. I mean, and public utilities around Canada need to be upgraded. So why don't we open that up for investment by pension funds?
Claude, as always, great speaking with you. Thank you for your time and insight, and stay safe in your undisclosed location in the United States.
I can disclose that I'm in Naples, but...
Claude Lamoureux is the former head of the Ontario Teachers' Pension Plan.
Bye-bye.
For insights into the Institute's views on pension reform in Canada, visit cdhow.org. I'm Michael Hainsworth. Thanks for joining us.
You've been listening to the C.D. Howe Institute podcast with Michael Hainsworth. Subscribe on iTunes, Google Play, and Spotify. The C.D. Howe Institute is an independent, not-for-profit research institute whose mission is to raise living standards by fostering economically sound public policies. The Institute is widely considered to be Canada's most influential think tank and a trusted source of essential policy intelligence, distinguished by nonpartisan, evidence-based research and subject to definitive expert review. Visit cdhow.org and follow us on Twitter and LinkedIn. Thank you.